Today I test out my hypothesis that the Ichimoku indicator is more likely to work effectively on Japanese yen pairs compared to non-yen pairs. Was my hypothesis correct? Find out after this brief message. Darwinex is a UK FCA regulated broker and asset manager on a mission to disrupt the financial trading, investing and asset management industries. If you're a talented trader looking to attract investor capital to your strategies, Darwinex is the fastest way for you to do this. We enable traders to raise third-party investor capital and then charge success fees on high watermark profits. Additionally, Darwinex itself invests in its traders with our seed capital allocation program that allocates up to 90 million euros per year in successful trading strategies. So, if all of that sounds interesting, learn more by clicking on the link here, or you can find further links in the description right below. Now back to today's tutorial. Way back in the first few episodes of this series, I put forward a hypothesis that because the Ichimoku indicator is mostly used in Japan and during the Asian session, it might mean that it will work more effectively on yen pairs. Today, I reach the point of testing that out, so let's see if it's the case or not. We now enter the next stage of the implementation of our Ichimoku indicator as part of this Spotlight on Indicator series. Let's briefly recap where we got to. So the blue equity curve here represents the results I've managed to achieve without yet performing an optimization. So this is just the basic implementation of the Ichimoku rules and a number of filters. However, I'm now building up the implementation one stage at a time in each video, and the orange equity curve here represents the first phase of that, which was the logic for the Tenkan-sen Kijun-sen crossover itself, which as you can see is a loss-making strategy. Now just one point of clarity here. The position sizing strategy used for the orange curve here is based on minimum lots. And it's always a good idea initially to use minimum lots to ensure that when the strategy is still incomplete, you're not going to run out of equity before any backtest has completed. And so the best way to make sure of that is simply to use the minimum possible lot value per trade. However, once you've reached a phase in the strategy implementation where you start to produce a profit, you can then move to a more robust position sizing methodology, such as a risk-based position sizing. So for example, risking 0.5% of equity per trade. But you're not going to be able to do that until you've implemented a stop loss. So because we're not at that stage at the moment, even when we implemented the noise filter in the form of the Kaufman efficiency ratio, I was still using minimum lots for that. So that's represented by the yellow equity curve here. And as you can see, because we filtered out those trades that would have opened during noisy market conditions, we now have far fewer trades. And the hope is, of course, that you are eliminating those trades that would have been whipsaws, but leaving in place the trades that would have been profitable. And as you can see from the curve, that must be happening to some degree because now the strategy is almost break even. So there's just 26% of the trades that now remain, which is approximately what my target was when I implemented the parameters for the efficiency ratio. But of course there are a number of other filters that we'll be implementing, including a trend filter, and in today's episode an asset filter. And so the number of trades of the ultimate strategy is just a little over 2,500. But one important point to note is for this yellow equity curve we are still using minimum lots because obviously we haven't implemented a stop loss yet. Now, the way that I perform my asset research is by running a backtest, and during that backtest I write out data to a file that logs a number of metrics for each trade, including the asset that the trade belonged to. So let's now start off a backtest which will repeat the backtest we did last time, but this time I'm going to actually perform the research on those assets. So we'll come back to this in a moment when the strategy tester has finished. Okay, so that's now completed, so I'm going to go to the Agents folder to open up what I call the Closed Trades file. And I find the easiest way of analysing data here is to simply create a pivot table. And then I have all of the information I can analyse here and the metrics that I can use as measures. So I'm going to be looking at the symbols here, and I would normally perform this analysis using the R multiple, which is a Van Tharp metric. However, you need to have implemented a stop loss to use this. So for now, I'm just going to use net profit. And I'll look at the sum of the net profit for each of the symbols. And I can come in here and create a pivot chart. And so I can see exactly how much profit each of the symbols has produced. Now, I'm just going to look at this same chart in an editor now, so that I can easily mark it up. Now, those of you that have seen the full series will remember a statement I made in probably the first or the second episode. And one of the things I said I wanted to do was to perform analysis of how well Ichimoku performed on the Japanese yen pairs compared to non-yen pairs. And the reason I wanted to do that was because obviously Ichimoku is much more heavily used in Japan and in the Asian sessions. And so here I'm going to highlight each of the Japanese yen pairs, going from Aussie yen on the left to dollar yen on the right. And take a look at that. 4 of these are very profitable, and the other 3 either make a small profit or lose a very small amount. And so, just like I suspected, this particular Ichimoku strategy does appear to work more effectively on those yen pairs. Now, there are a couple of other assets here that also produce a profit, and they are pound dollar and euro CAD. Now, what it's impossible to know at the moment is whether these are profitable just by chance, or whether maybe these are also being traded fairly heavily in the Asian session and the Japan markets. And so these are 2 assets that I'm going to be keeping a very close eye on when I implement alternative Ichimoku strategies in the future. But for now, I'm going to assume that it's chance that these have performed well. And so I'm going to run another backtest in a moment that will trade just the 7 yen pairs. But these 2 assets, just like all of the other non-yen pairs, will not be tested. However, if in future analysis of other Ichimoku strategies, these 2 also perform well in those, then I would consider trading these alongside the yen pairs. So I'm now going to run exactly the same strategy, just with those 7 yen pairs. And once again, we'll come back to this in a moment when it's completed. Okay, so that's now completed, and you can see that now for the first time we've actually turned a profit on this strategy. So if we now plot this on the chart with the other phases of the implementation, we now get this green line here, which represents just over 4,500 trades. So it's still a fairly decent number of trades, giving us some statistical significance. But when plotting it on this chart, which has such a diverse range because the blue equity curve here is on risk-based position sizing, whereas the others are on minimum lots, makes it fairly difficult to see. But we can see that more clearly by simply plotting it on its own. Now, one thing worthy of note is that now we have a strategy that is turning a profit, we can implement our stop loss strategy and then convert to risk-based position sizing. And so for the remainder of the implementation phase, we will use that as opposed to the minimum lot size. And that is going to be the topic of the next episode. So I'll show you the implementation of the stop loss. We'll also take a look at this stage at how risk-based position sizing improves the equity curve. And then we'll push on with the next phase of the implementation in episode 15, which will be the trend filter based on where the price is in relation to the Kumo or the Ichimoku cloud. So that's all we've got time for this episode. If you've got any value from this episode at all, please do remember to give me a like. And although it does sometimes take me a while to respond to comments, I do always read them. And I love to get feedback on my videos and also the work that you guys are doing. And so it's always really appreciated if you just drop a comment underneath the video. Now, until next time, trade safe.